Hello, my name is Brian, and I'm with NorthStar Capital. Most of you all know me that are watching this. Um, what I'd like to do is in this videos, and always in the market direction video, we like to talk about where we think the market's headed. And that's a pretty grave question that's on everyone's mind at this given moment, where the market is and everything that's taking place in the world. What we've done here is this is the SPY, which is the Standard & Poor's S&P 500 ETF. This is a really good gauge, and we're going to pull up the other markets as well to kind of show you where we think the markets are headed. And what I've taken the time to do is actually draw these trend lines. And as you can see, this is an area of resistance due to the price action of the previous period of time in history. Prices come up into this area, and look what's happened. Looks to be reflecting off of it. A good pullback or drawdown in the economy is to this 132 to 134 range before I see it kind of retracing. Okay, price going back up, and then it resuming its natural course to the downside. One thing about this area right in here that everyone needs to take into consideration is that when it made this new high that was right here, it was put back out in 2007, it did it with a 9-to-1 ratio. For every one buy order, there were 9 executive sell orders for some of the larger companies that are listed on the exchange. That's a point of relevance. If the executives don't want their companies, why would anybody else? With that being said, the technical part of investing, this tells us that it's time to sit back and just wait for this thing to correct back down before we go long again. And there are opportunities in investments that actually benefit from this decrease. So NorthStar Capital will be looking to exploit those opportunities to add some return to the client's portfolios. I hope this actually helped. This is the first time we've started doing any type of short video where we're actually showing a piece of the software that we use to increase our probability in the trades. And let's pull up some of the other markets really quick. QQQ, this is the ETF that we use to kind of gauge the NASDAQ, and this will take a second to load. These are some pretty hefty programs that are running in the background in order for us to display this in this video. And of course, look, this is perfect. Price action comes right back up into this area here, and it started to reflect off. This one's a little bit more unique, and I'm gonna have to squinch this little chart up. This area here, this is where the NASDAQ is headed to. Okay, so let's just draw that on our chart so that everybody has some visual here. And it may take it some time to get there, but she's going. That's a pretty big decrease. You're looking at the price right now at 67.93, and it probably won't stop until it gets to the 53 to 49 range. And then let's look at the last investment, and this is the Dow Jones Industrial Average. And of course, you can tell it's in some pretty uncharted territory here. Okay, and looking at this graph, whenever you have one extreme in one direction, you're going to have the equal and opposite extreme in the other. That law holds pretty true. So I would expect the Dow Jones Industrial Average ETF that you're looking at here to descend in price from 143.88 down here to this 125 to 124 range. I hope this video gives you some insight into where we think the market's headed and some of the thinking process that goes into how we make our trades given the market conditions. If you have any questions, please go to the Contact Us page and reach out to us. We'd be happy to answer any questions. If not, have a great day, and I look forward to posting more of these videos for your enjoyment. Thank you. Bye-bye.